So what will home prices do in 2019? Let's take a look and find out. Hey ladies and gentlemen, I am Eric Dennison with Sky Castle Real Estate, and really I'm looking to put this video together for one very specific reason. There's a lot of concern still about what the real estate market's going to be like in 2019. We're a good month in, January's about wrapped up. There's still a lot of gossip out there, and we're going to give it to you straight. We're going to give you the facts, so let's jump right into it. I'm just going to say it to you this way. We're going to be fine. The biggest things that we look at right now are interest rates and inventory. We're still in a really good spot for those. All right, so here's the projections from the Mortgage Bankers Association, Fannie Mae, and the National Association of Realtors. Now, both the MBA and Fannie Mae think that sales will actually be greater than they were last year. Now, as far as interest rates are concerned, they've gone down the last 4 weeks in a row. And really they've had a 3-month low, and even if they start to tick up a little bit throughout the year, we've got to remember one thing. Interest rates have really been at a historical low. So if we look at into the 1970s, the average rate was 8.86. In the 1980s, we're at 12.7. In the 1990s, we're at 8.12. In 2000, the average rate was 6.29. So, really, we're in a really good spot right now. And, if anything, they're going to continue to rise slowly. But let's go now to look at one thing that has been causing a little bit of confusion, and that's pricing. So here we're looking at the Shiller year-over-year price change for the 20 major metros in the country. And what I want you to see is how we're not looking at any red lines here. We're not talking about depreciation, but we will see some softening on the appreciation, and meaning the levels of appreciation have dropped rather dramatically over a point over the last 6 months. So the amount of money houses are going up is decreasing, but really the value of the houses are not. So I look at appreciation this way. So if my hand were a plane, appreciation is pushing the nose of that plane up into the air. Now, depreciation, or basically when we go into a recession, that nose is pointed down. So we are still appreciating, we're just losing a little bit of ground, but we are still going in the correct direction. Now, let's look at a quote here by Sam Cater. He's the chief economist at Freddie Mac. The deceleration in home price growth reflects improving inventories and provides buyers who experience tight supply for much of the year with more inventory to select from. Now, one thing to consider is if we look at 2017, the big thing that we're looking at is there is such low inventory, there are so many buyers, we just couldn't satisfy the need. That time doesn't necessarily exist right now. So we are seeing prices starting to soften a little bit more, and we are starting to see more listings starting to hit the market, which is a good thing. And it's really good because the big thing that people were concerned about is this bubble that was going to emerge. And really this is a good thing, because then the flip side of that is people were concerned about an upcoming bubble, and that's not the case right now. So instead of there being a crash in price, it looks like we're actually going to get back to a more normal appreciation level. So we can really prepare for that soft landing that, where we're still appreciating, it's just slowing down, and it's almost like coming down for a landing with that plane analogy that we used earlier. So we're bringing it down a little bit, but it's still moving forward. So that's good. So when we look at the year-over-year inventory levels, one thing that we're talking about, one thing that I want you to see is what we're looking at here is the last 6 out of the last 7 months. Now, one came in at 0, but the other 6 of those months, we had an increase in the number of listings compared to last year. that follows a 37-month trend where, really there was less inventory than the same month the year before. So, inventory is starting to pick up, and I think the pickup in the inventory is what really drove existing home sales in the last 2 months into a positive number. So sure, interest rates and the sticker shock of the rising interest rates had some impact on it, but really I think the bigger thing was just the low amount of inventory of homes that were actually up for sale. That was the major concern. So we're starting to see those numbers come back up quite a bit. So that's good. Now if we look at the United States as a whole, the average days on market we're looking at is 42 days. 42 days on average that a property would sit on the market from the time it was listed to the time it was technically sold. And really nationally, I think we're going to start to see that creeping back up again. So for my homeowners who are considering selling their property, that is something to consider, is that we're not looking at putting a property on the market, sticking the sign in the yard and having it be gone in a week or two. It's going to take a little bit more time. So that has a direct impact, especially when it comes to how we price the home. All right, I want to move right along and take a look at this report by the FHFA, and this is the year-over-year change in price. So the U.S. as a whole, we are seeing a price increase of 6.34%. And if we break it down by the region here, you can even see that every single region are still showing an increase. Some a little more than the other, but overall, this is still a very good thing. Now let's skip over to the year-over-year change in price by state. And we can see that there's no dark orange states here, meaning that some states definitely slowed up a bit, but there's no one state that's in a depreciation mode. And I think it's important that we understand that. Okay, now this source is going to be from CoreLogic. This is the year-over-year change in price. And when we look at this one, you can see now that there is one state, the state of North Dakota, again, an energy state, and the energy state definitely has been affected. That's lost value that, there was some depreciation there, but still very minimal. Now, higher interest rates and home prices have reduced a buyer's ability, or their purchasing power, if you will, to buy a home. Now, this hasn't made houses unaffordable. It just means that, maybe if they could have afforded, maybe if they could have bought a $300,000 home before, now they can afford a $290,000 home, for example. The key thing that agents need to get is they have to price your home competitively today. They have to price it for today. If the expectation is, well, if the home is worth $400,000 and we price it at $410,000, $415,000, yeah, it may have jumped off the block a year ago even, but now we're starting to see that's not necessarily the case. It's those homes that are just slightly overpriced that are really starting to sit on the market. So we have to price it competitively today. Now let's take a look at this slide here. This is the month-over-month percent change in price. And now one thing we do need to consider is that we just finished with the holidays. There's usually a little bit of a slump in terms of the volume of buyers, compared to the springtime. So month over month, though, we may see a little bit of a lower numbers here. And this report's according to CoreLogic. Many states in the country say that, they're showing a depreciation number. Now, if we look at the case Shiller month-over-month price changes, again, this is going to be a little more seasonal for this. And I'm giving you these numbers because I want you to see that in some parts of the country, in some metros, especially when you look at the metros along the West Coast, Seattle lost 1.1% month-over-month. San Francisco lost 0.7%. Portland lost 0.6%. And Cleveland is there, but everything else is less than a half a point. Now, in some of those higher end markets, there may be just that little bit more of depreciation, but overall, everything is still looking really good. Now, after looking at the numbers, we do not believe that prices are going to fall across the country. And really there are some of those overheated markets, and we may see some minimal price adjustment in those areas. But again, the biggest thing, if you're putting your house on the market in 2019, it's got to be priced right. Too many times I see homeowners that come in with the mindset of something that happened a year ago even. Thinking, well, the market's super hot. I could put my house on the market and it'll be gone in a blink of an eye. And we gotta very much watch that sort of stuff. There have been cases where, I've had a listing, it went under contract, and 2 weeks later, the market had changed just enough that we had to make adjustments on the price. So something that you may have heard, some time ago may not be accurate. And I know we're talking nationally and we're looking at the big metros, but we got to look really in your backyard, your zip code, your neighborhood, the comparables there, and what's going on there, because there could be micro bubbles that could be performing better than the one across the street. So that is really something to consider too. If you want to get your house sold right away, you can't play with pricing. Even just overpricing it just a little bit could really cause your property to sit on the market. So that's something that we're really paying attention to here. So this is the slide called What Will Home Prices Do in 2019? And this is projections of 100 economists, market analysis, and real estate experts. And by percentage, 94 of 100 are saying that we will still see appreciation. 4 of those 100 are saying no, we'll see some depreciation, and 2% say there will be no change at all. So I want you to understand where these numbers are coming from. Now, according to Goldman Sachs, we're going to be fine. Now, on this slide, we're looking at the projected home price percentage of appreciation going forward. Now, we've got a couple good sources on here. This is really what we're paying attention to, guys. This is what matters. So we can look forward to 2019, 2020, and in some cases 2021 and even 2022. And really this is coming from the Home Price Expectation Survey. This is Zelman and Associates, and they've just come out with a few of these numbers, including Mortgage Bankers Association and Freddie Mac, NAR, and Fannie Mae. Now, as somebody who's looking to get into the real estate market right now, these are all indicators that you got to realize they're in the green. There is no red on this. So whether you're a home buyer going, is now a good time to buy a home, or you're a home seller thinking, is now a good time to sell my home, these are all really good signs for both of those goals. So we still think that appreciation is going to continue here. But if we take a look at the projections of the ongoing appreciation moving forward, looking at the Home Price Expectation Survey, they expect that appreciation will slow down rather dramatically over the next couple of years. So the home runs that we were seeing in 2017 and 2018 where people were, they put a house on the market and they would get $20,000 or $30,000 above asking price. That's a real home run. I don't think that we're going to see a lot of that here in 2019. Having a home is going to be a good thing, and here's why. 39,520. That's the potential growth to family wealth over the next 5 years based solely on increased home equity. So we can see here in the beginning, in January of 2019, that if you have a $250,000 home, your increased home equity based on price appreciation projected by the Home Price Expectation Survey shows that if we pan this all the way out to January 2024, that you will have a home valuing at $289,520. So with that number, they'll create almost $40,000 in family wealth. And if we take a look at the very conservative appreciation levels that the Home Price Expectation Survey has said, then the projections show that in 2019, this will just simply be another good year. Now, in summary, there's going to be some softening in appreciation, but we're not going to crash. I'm Eric Dennison with Sky Castle Real Estate. Thank you for watching.